Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about GLACIER BANCORP INC quarterly report. GLACIER BANCORP Inc. offers a wide range of financial services to its customers. The company's business services include retail banking, business banking, mortgage origination, and loan servicing deposit products such as plus non-interest-bearing deposit accounts plus interest-bearing deposit accounts, e.g. negotiable order of withdrawal, demand deposit accounts, plus savings accounts plus money market deposits plus certificates of deposit, fixed rate and negotiated rate jumbo, plus individual retirement accounts lending services including plus residential real estate loans, construction and permanent, plus consumer land or lot loans plus unimproved land and land development loans, plus commercial real estate loans plus agricultural lending, plus consumer lending, plus home equity loans, plus loans to states and political subdivisions, specialized services for residential builders, including plus pre-sold and spec home construction loans, plus lot acquisition loans. GLACIER BANCORP Inc. stock has experienced a significant decline of over 17.49% in the past year due to several key events. The acquisition uncertainty surrounding its purchase of Bank of Idaho Holding Co. led to a 12.37% drop in pre-market trading. Additionally, the company's second and third quarter earnings misses contributed to negative investor sentiment, with net income falling short of analyst estimates despite year-over-year growth. Furthermore, deteriorating credit quality, as evidenced by an increase in non-performing assets, intensified selling pressure on the stock. Analyst downgrades and lowered price targets from firms such as Wall Street Zen, D.A. Davidson, Keefe, Bruyette & Woods, and Raymond James also contributed to the decline, driven by broader concerns about credit exposure within the banking sector. The primary drivers of revenue growth or decline in a financial institution can be attributed to several key factors. Net interest income, which increased by $93,000 from 2024 to 2025, is a significant contributor to revenue growth. Loan growth, with an 8.6% increase in loans receivable, also played a crucial role. The origination of loans held for sale and the successful operation of commercial properties contributed positively to revenue growth. Additionally, cash flow stability from business operations and personal income and credit rating of borrowers had a positive impact on revenue. Economic conditions within market areas also influenced revenue growth or decline. Revenue from contracts with customers, service charges and fees from deposits, and proceeds from sales and calls of available-for-sale debt securities all contributed to revenue growth. However, the increase in residential real estate loans and commercial real estate loans was not as significant as other factors. The growth in home equity loans and other commercial loans also had a moderate impact on revenue growth. Overall, the primary drivers of revenue growth or decline are net interest income, loan growth, origination of loans held for sale, successful operation of commercial properties, cash flow stability from business operations, personal income and credit rating of borrowers, economic conditions within market areas, and revenue from contracts with customers. Net income and profit margins. A shift in performance. The financial performance of the company has undergone significant changes between Q3 2024 and Q3 2025. Net income increased by a substantial 33% from $51,055 to $67,900, while year-to-date net income rose by 37% from $128,390 to $175,249. This growth can be attributed in part to the acquisition of BOID, which contributed $15.1 million to the current quarter's net income. However, profit margins have not followed suit. The net interest margin decreased by 6.9% due to a combination of factors, including an increase in effective tax rates from 16% to 18.1%. This resulted in a 58% increase in tax expense, largely driven by the rise in pre-tax income. Non-interest income as a percentage of total revenue did see a slight increase, rising by 0.6%, but this growth was not enough to offset the decline in net interest margins. Overall, while net income has seen significant growth, profit margins have taken a hit due to increased tax expenses and decreased net interest margins. The company is generating positive operating cash flow, indicating a strong financial position. In both 2025 and 2024, the net cash provided by operating activities exceeded the operating cash flow, resulting in a surplus of $245,069 in 2025 and $150,184 in 2024. This suggests that the company's operations are generating sufficient cash to cover its expenses and investments, positioning it for future growth and stability. The company has a history of paying dividends to its shareholders. This is evident from various pages in the financial summary, where it is explicitly stated that dividends have been paid or declared. The amounts mentioned range from $37,516 to $115,984, indicating a consistent practice of distributing profits to investors. In contrast, there is no indication of share buybacks, with one page even stating no for this purpose. That concludes the financial summary for Glacier Bancorp Inc. Feel free to comment below, and I will be happy to answer them when possible.